We have seen that the PSU basket has picked up pace and there has been strong price momentum that we have witnessed in the past few weeks and months as well. And during the process, an important chart pattern has been formed on the Nifty PSE Index. So what is that, and what are the implications? How has the past behaved for this particular chart pattern? Let's address that. First and foremost, let me highlight the pattern that I am referring to, which is called as the golden crossover, and it is a bullish indicator that technical analysts look at, and this time around it is on the weekly time frame that this particular pattern has been formed on the Nifty PSE Index. What it signifies is when the shorter term moving average crosses above the longer term moving average, and in this case it is the 50-week moving average that has crossed above the 200-week moving average. Remember that this is the first time since 2016 that we are seeing such a chart pattern being found on the Nifty PSE Index, and in the last 10 to 12 years there have been only 3 such instances where such a pattern has been formed. Let me highlight what happened in the past instances that we've had. Over the next 8 weeks, the Nifty PSE Index remained largely flat with a positive bias. Over the next 12 weeks, the return was positive 3%. Over the next 25 weeks, it was positive 6% on an average, and over the next 52 weeks, it was positive to the tune of about 3%. So definitely, the price momentum does look like there could be some single-digit gains going forward for the PSE basket. But the price performance has been extremely strong, and this time around it could be quite different. The Nifty PSE Index is up about 50% in the last 6 months, and there have been 4 stocks which have delivered more than 100% return in the year 2021 itself. You have IRCTC, NALCO, as well as Oil India and BHEL that have surged more than 100% since the start of this particular calendar year. And if the target prices which are pegged by analysts are to go by, there are some stocks which have some more room to run up, the likes of SAIL, where the target price return potential stands as high as 30%, HAL return potential of 28%, NMDC's return potential is 23%, for PFC it stands at 21%, GAIL India is 18%, and then you have BPCL and REC which also have a 16% return potential over the next 1 year if you go by the analyst consensus target prices. But on the flip side, there are some stocks where analysts are anticipating some bit of pause because the stock prices may have run up ahead of themselves, the likes of BHEL, but the target price is 50% below the current market price. A similar case for IRCTC, where the analyst consensus target price is about 47% below its current market price, and NALCO along with NHPC, which also has target prices which are below their current market price. But definitely looks like with the privatization drive picking up pace, and the finance minister also indicating that LIC could, the IPO could be concluded by the end of this particular financial year, is definitely looked upon as a positive sign, because we have seen that the privatization of Air India has been successfully announced. So there is renewed momentum that we are seeing once again in the PSU basket.